we are going to learn about foundations of internal auditing. In this session, we explore the foundations of internal auditing, why this profession exists, its guiding principles, and its strategic role in the organizations. Internal auditing is defined by the Institute of Internal Auditors as an independent, objective assurance, and advisory services designed to add value and improve an organization's operations. Let me share my screen to show you your content from the CIA book. Now here, purpose of internal auditing. Before that, just look into the POC part here. So what we are going to learn, there are four parts in this particular chapter. Purpose of internal auditing, internal audit charter, which is a very important topic and a very important document from an engagement's perspective, impairment of independence and rules in risk management. In the orientation session, we already learned about in independence, risk management. Now, from the very foundation, at a very gradual level, we're starting our course. So this course covers foundation of internal auditing with subsection 1 to 3 and 7, 8. Basically, this covers our 35% of the syllabus. Out of 125 question, you can suppose almost 44 questions from this particular unit. Learning objectives describe the purpose of internal auditing according to the global audit standards, explain the internal audit mandate and responsibilities of the board and chief audit executive, which we call as CAE. Recognize the requirements of an internal audit charter, identify situations where independence of internal audit functions may be impaired. Recognize the internal audit functions rules in the organization's risk management process. I'm audible to everyone.
Yes, sir.
Yes, sir.
Now, a purpose of internal auditing. Let's begin with the definition. Why we are studying about internal audit? What is internal audit is all about? How this internal auditing career help you to grow? What kind of services in internal auditing can provide? What type of engagements are there? I'll tell you everything. Just start with the definition first. As you already see in your book as well, internal auditing is an independent. Just give attention to these words as this is really important from MCQ perspective as well and for your real life as well. What is saying? Internal auditing is an independent, objective assurance and advisory services. What do you mean by independent? Independent, anybody of you have an idea, any background about this independent, objective assurance or advisory services? We will cover the entire definition later on, but I just want to understand from your understanding's perspective as well. Anybody?
Independence, free from all the biasness and influence.
Monica, I'm not able to hear you. Your voice. Okay.
Independence means all free from all the biasness or influence.
Right. So when you are performing an internal audit functions, internal auditor's opinion is not subject to biasness. It's not subject to influence. When we read about the ethics principles of internal auditor, you there as well are going to understand about the independence, the objectivity, due care, professional skepticism, these kind of things you will learn about it. What happens if internal auditor is influenced by the top management or the middle management? Will he or she able to put his or her opinion, audit opinion in front of them, or it is the true opinion there we can provide? Obviously not. I gave some of the examples, some of the case studies in our last orientation session, which I'll explain you again. What happened during those real life scandals? Some one way or another way, the independence of the auditor influenced. Auditor was not able to act independently without any biasness or without any undue influence, which results in financial fraud. That's why other as per the definition as well, it is saying that independent internal auditing is an independent and objective assurance. There should be some objective of doing the internal audit. Either we are doing some compliance testings, we are doing some financial audits as well. We are looking up to some HR functions, which is relevant from ICFR or IFC perspective. I will let you know about both of the terminologies later on from the specific acts. What is assurance? If we are making an opinion based on the facts and figures, that is, we are providing our assurance services. We are providing assurance to the stakeholder that, hey, as an internal auditor, we have done, this is our scope, we have done so much of things. Now, on the basis of our testing, on the basis of our auditing, this is our opinion. There are two levels of assurance covered in this overall examination, which I call assurance services 1 and assurance services 2. If you would like to look into it, I will show you in a moment. Assurance services too. As you can see, what we are talking about. We are talking from compliance audit. What we are talking from financial audits, management reporting, organization culture audit. This is also covered under this unit itself, but my purpose is just to make you understand the importance of the definition and why this definition comes into picture. Why IIA Institute come up with definitions, how we can interpret it. And we are in our middle of interpretation of this. As you can see, we have operational auditing, we have compliance auditing, financial audits, management reporting, organization culture audit. For organization culture audit, there are controls is in place, which we call as ELCU controls. When we are discussing about the process maps, how they design, how they create it in the organization, where the corrections is needed, how many controls are there. I'll explain you about those ELC controls as well. But from a background perspective, from the assurance services, these all are covered under the assurance part. We will learn about it when we are stepping into this chapter. I hope it helps. This is making sense and you are able to understand this. And the next thing is advisory services, which we are giving as an advisory role to our stakeholders. Why we designed it? The main line here is add value. And remember, you will get definitely one question either in a mock test or final examination on the purpose of internal auditing. They will give you 4 of the options and you have to identify the right one. And I can tell you this add value is really, really important. Why we are doing internal audit? Just to add value and improve organization's operations. If our audit functions able to add some values and organization's operations improve a lot, who will benefit from it? I believe all the stakeholders, be it regulatory bodies, be it vendors, be it customers, be it your employees. Everybody going to get a benefit of it, this value additions and improvement. That's why we are performing internal audit. How it can help? It can help an organization to accomplish its objective, bringing a systematic, disciplined approach. What is the objective of an organization? You heard about mission and vision statements. You heard about long-term and short-term goals. Policy and procedures is in place by the top management. Why this all comes up? Because organizations board or organization as a whole working for a particular objective. And for that sake, we internal auditor plays a very important role when we provide some value addition and some suggest some improvement in their operations. Then only organization is able to accomplish its objective. And how it can do it? Bringing a systematic and disciplined approach means when the top management of any company come up with some of the policies and procedures, it's our responsibilities to evaluate it as an internal auditor and also define a disciplined approach to all the control owners, all the processes in the organization so that they function as they're expected to do. Also, they work in an integrated manner. It's not like that one process is doing their independent of, for example, if you are looking into a revenue perspective or a sales perspective, it cannot be a case now that sales department is functioning in isolation. Obviously, they have to deal with the purchase department or delivery department as well. Then only the whole O2C cycle will complete. Then only we have to understand that, hey, if we are selling some products, so obviously there should be stock in place, which purchase department may ensure that we have right set of inventories in place. So it is a disciplined approach for all the departments. So we have to evaluate as an internal auditor and also improve the effectiveness of governance, which is policy and procedures like oversight mechanism, risk management in the entire processes of the company, and control processes. I just tell you about the sales. I just tell you about the purchase. It's an O2C cycle. Everybody knows about O2C P2P. Any background on that? O2C cycle, P2P cycle.
O2C cycle is related to sales and P2P related to purchase.
Right. So here, what we are doing as an internal auditor, we have to assess the risk in the entire process, be it P2P, be it O2C, or be it HR, or be it any other process. And then there will be controls is in place to mitigate the risk basis of risk management practice. And we have to evaluate the control processes as well. This is about internal audit. The definition covers every aspect. Let's read out it again. Internal auditing is an independent, objective assurance and advisory service designed to add value and improve an organization's operations. This helps an organization accomplish its objective by bringing a systematic, disciplined approach to evaluate and improve the effectiveness of governance, risk management, and control process. The purpose statement helps internal auditor and stakeholders to understand and articulate the value of internal audit. The purposes which we read just in above paragraph, what it helps and whom it helps. This helps the internal auditor as well as stakeholders to understand and articulate the value of internal audit. Let's take an example. An organization is a banking company. Just take an example of a BFSI sector. How will you convince the stakeholders that, hey, you require an internal auditor? You have to present some purpose statement to them. You have to provide a pitch to them that how internal auditor can add value what benefit they will derive from the internal audit, then only they will convince, right? That hey, now I'm as a board of the company, we have to appoint an internal auditor. Regulatory requirement is something which is mandatory for those them, but obviously their willingness to conduct this internal audit is also very important. And the purpose statement really helps the stakeholders to understand and articulate the value of internal auditing. Internal auditing creates value by providing what? Providing the board and management with independent, risk-based, and objective assurance, advice, insights, and foresight, which we already covered upsides. Let's understand one by one about the benefits of it. How it enhances the organization's this approach. What benefit we can derive from it. Let's first discuss about first point, which is successful achievement of organization's objective. Okay, when internal auditor is an independent and performing risk-based audits. So obviously, whatever organizations come up with the long-term plan, their vision, mission statement, when we evaluate it and identifying the gaps, obviously when gaps fill up, so it ultimately led to achieve organizations its objective. Second point, governance, risk management, and control processes. Governance we already talked about. Risk management is already discussing control processes as well. Decision making and oversight. How it helps in decision making. If an internal auditor performing internal audit functions, be it any testings, or control testings, risk management, governance testings, or something like that. If you identified any gaps, if you identified any particular risk, and you highlight it to the board, highlight it to the top management and the middle management, obviously they will came to know that where are the gaps and which those gaps are not able, if they are not able to fill those gaps, it ultimately impacts their decision making and oversight. So if we are performing our functions in a good manner, in a very independent manner, in a professional manner as well, it will gradually improve decision making and oversight functions for the company. Another very important reputation and credibility with the stakeholders. Do you remember when, in instances when we are read about annual reports, any particular information of any listed companies coming up on your business channels or in the business newspapers? The reputation is very important word. Sometimes it is not impacting that directly, but it really impacts the organization's going concern as well. Anybody of you heard about Hindenburg report in near past 1 or 2 years? We have heard about Hindenburg report. Any idea?
Yes,
Any idea
it
about?
was about the Adani Group.
Can you repeat the words?
Yes, it was about the Adani Group inside
Right.
report.
What happened during that? Anybody of like being an auditor, you have to ask these questions from yourself as well, from your colleagues as well. What happened during that time? Is there any validation by some auditors, some authenticated agency or regulatory body? I believe no. What impact it has? It impacted the reputation of the company and ultimately results in the loss of the shareholders because their stock rates went very down immediately after that report. The authenticity of report is really important. That's why internal auditor report plays a very important role in the reputation and credibility. When we are certifying something on the processes front, it means that if we evaluated it, we understand about their systems rather than anyone else out in the outside environment. And when we make some opinion, we provide an internal audit report, it led to two important factors, which is reputation and credibility with the stakeholders. We are providing an assurance, as we discussed about assurance services, right? In the definition, this is something which assurance plays a very important role. We are giving an assurance that, hey, this company, XYZ, has effective processes, there is no risk in their processes, and it is in a longer run going to meet out their organization's objective. And ultimately, it helps them to decision making as well, but with the stakeholders give a sense of belief, sense of trust. That if internal auditor certifies something, that particular report plays a very important role to increase the reputation and also the credibility of the organization with the stakeholder. And last point is ability to serve the public interest. That's why if the Hindenburg report, due to Hindenburg report, the Adani Group is able to serve the public interest in a shorter run. Obviously, in a longer run, they will. But what happened? Because of their reputational risk, which arises because of that report, even if it is unauthenticated and not any reliability, Adani Group is a public company. It's a listed company. So obviously, public has also interest in it by way of shareholding, customer, vendors, or something. And their role can be different, but ultimately they are serving the public. But with this kind of report impaired that interest as well. But our internal audit report, when if internal auditor is in working for any organization, that report serves the public interest as well. It is a role I'm talking about from the internal auditor perspective. An external auditor is majorly concerned about the financial part, and internal auditor, you have the role of your role should be throughout the year. We have a different cycles when we perform those functions. For example, uh, we are taking walkthroughs, we have working on some interim phase and the final move forward phases as well. We'll discuss more about when we come into internal audit functions as well. But try to understand what we are learning here. We are learning about the purpose. We are learning about the need of internal auditor. Now, the last point in this is internal auditing is most effective when it is done by skilled professionals, which is you guys, CIA, Certified Internal Auditor. It is performed by competent professionals. See, as you can see, anybody can perform the internal audit. There is no such uh, regulatory requirement that only these person can perform internal audit. Even the employees of the company can perform internal audit as per Indian Companies Act. But does it make sense? They might be or might not be a skilled professional to perform those service, those functions. So internal audit is most effective only when it is done by skilled professionals, CIAs, certified internal auditors, competent professionals who conform to the global internal audit standards. CIA, you will learn about the internal audit standards, and it is applicable globally. It is not that it is applicable only for a one region geography. It is applicable approximately for 170 plus countries. We already discussed about independence. Our internal auditor is independent. Its position in the organizations allows independence with direct accountability to the board. So internal auditor is directly accountable to the functioning to the board or directors of the company. And it should be unbiased. Internal auditors are free of undue influence and committed to objective assessments. What do you understand by undue influence? When you identified any gap and that particular control process owner or control owner comes to you and say that, hey, this is not something very important. You are not, please don't highlight it. They try to give you some kind of favor, some kind of things. So it ultimately impact come as undue influence to internal auditor. And what happened if you are not able to highlight those gaps? Means your opinion is biased. You didn't perform your duties and discharge your duties in a professional manner. That's why for effective internal auditing, it is very important that internal auditors are free of undue influence and committed to objective assessments. Am I clear with this part? Any questions here? I'm giving you a couple of minutes. You can ask your questions for this section.
Could you please tell on differences of advisory and assurance?
It's between advisory and assurance services.
Yes.
Okay. Anybody of you want to learn about it? Because ultimately we will cover it in, during the assurance services as well. I can tell you. Yes, I have some water. So for a quick, I can give you a quick example. Advisory services helps to business to plan, improve, and solve problems. But when we are providing some assurance services, it helps stakeholders to trust the financial information. Means insurance services is on the financial part, financial reporting. But advisory functions covers everything. We also do the financial part here. I can tell you, give you an example from the objective standpoint. Let me open my video. So if you looking from an objective standpoint, advisory services provide expert advice to improve business performance, but assurance services independently verify financial information for accuracy. It's very subjective. In advisory function, we are not only concerned about the verifying the financial information accuracy, but we have to focus on overall business performance. But in assurance services, our major focus is around the accuracy of the financial information. If you looking from a scope perspective, it's also a different. Your assurance services scope is narrow, means it covers only mainly audits, reviews, and internal control assessments. But when it comes to advisory services, it is really broad as compared to assurance services, which includes your financial planning, mergers and acquisitions, IT consulting, and etc. If you will look, advisory services are not always independent because we are also providing some consulting services. We are also providing some financial planning, which is a more kind of services which is dependent upon the company's objective, company's requirements. But in assurance services, independence is mandatory. Assurance services is highly regulated. Advisory functions are not regulated as well. Less regulated or no, not at all be regulated. I hope this gives you a background about the assurance
Yes.
services.
Yes. Yes. Thank you.
Uh, So just before sharing my screen for the next topic, I just want to give you key exam point from this. So the IIA definition makes clear that internal auditing is both assurance, which is checking controls and reporting on them, and consulting and advisory, which is recommending improvements in nature. So sometimes what happens in exams is this exams will ask which of the following is not part of internal audit purpose. You already aware about which is the part of internal audit process, but sometimes examination center draft a question like this, that what is not covered, what following is not covered in internal audit's purpose. The answer should be, the answer is in any activity that a management is responsibilities like actually making management decisions. So internal audit is always an independent and objective oriented. Just to understand from examination perspective, when you're looking into the objective questions, you have to carefully read it. Sometimes we go with the flow that where I just give an example here in the question mentioned about no, not covered internal audit, but what we understood already is what is covered in the internal audit. So because of sometimes we are into hurry, we are just read half of the sentences and we are just marking our answer. It might create gives you a setback. So just carefully read the question when these kind of questions.
So Nikhil,
Generally, in the flow, we miss about no, whether it is mentioned at no or whether it is mentioned yes.
so when you say it's if it is in a situation of a no, you, you just now gave some example regarding the management performing some activity. So I just wanted to know. So I did not get that part when you just now mentioned some.
I'm not able to. Hello.
Hello,
Yeah,
can you hear
break.
me?
Yeah, better, better. Yes,
Better.
yes, please.
So I you just now mentioned in case of a when this what activity is not covered in the definition, you gave an example of something that is done by the management. So I just
So
wanted
management
to
is not performing it. Internal audit is performing. So options can be a bit different as well. I have covered only one option here. That answer might be that the answer is in any activity that management responsibilities, like actually management making decisions, making management decisions. The point can be anything.
yeah, I get that. So I just wanted to okay, fine, thank you.
I'm saying that I'm giving one point. You might have some other definition or other kind of thing. And we have the purpose of here is we only have to understand the smaller differences in it.
Yeah.
Because the MCQ is the four options which you get in the exam. It's very similar when you read about it, but it's very small difference which we have to understand from our concepts, our understanding. And ultimately, it covers the entire uh, uh, process because you're going to deal with 125 question at a stretch. When you're working on it, you have to do more practice before the exam because it will help you to identify, you have give a practice experience as well.
Sure.
So, for an instance, I can give an example. That an auditor in an healthcare organization might review patient billing process. You're just talking about the assurance services, right? I'm giving an example about it as well. So an auditor in a healthcare organization might review patient billing process. They would assure that billing controls are adequate and unbiased, and perhaps consult by any suggesting a streamlined coding system to reduce error. So both roles, assurance and consultant, are aimed at improving operations and controls, and thereby adding value to the organization. Why I'm telling you this, sometimes what we are looking up to is what is our objective as an internal auditor is also very important. What we are going to, what scope we have defined during our in the starting of the engagement is really important. And is it a limited review? It is something we are only looking into one process or the entire company's process. It depends upon our scope as well. Now we'll start move ahead with our next topic, which is internal audit mandate. According to Principle 6, we have few principles here. We'll discuss in detail. Principle 6 authorized by board. The board established, approves, and supports. According to Principle 6 of authorized by board, the board established, approves, and supports a mandate of internal audit function. The board is the highest level body charged with governance. Do you heard about those charged with governance? TCWG. Anybody knows about that? The word TCWG.
Those charged with governance.
Right. Why we called it those charged with governance? Why we all not only called as board of directors? Why we call as we use the word governance here? There must be some reason behind it. The reason here is if you appoint someone as only a board of directors and there is no such governance mechanism, governance responsibilities lies on his shoulders, what will happen? Nothing. Everybody in the organization works basis his understanding or her understanding, might be effectively, might be ineffectively. They don't know about the objectives of the company, where we are, where we want to go, what are the duties they have to work upon. That's why we call it as those charged with governance. Who is responsible for governance in the organizations? And TCWG is not only the board of directors. That's why it's called like TCWG. Audit committee, trustees, board of governors, all known as TCWG. So that's why the word TCWG is used in the auditing perspective. Because on time to time basis, be it internal auditor or external auditor, they have to communicate with TCWG, not only with board of directors. On some instances, they have to reach out audit committee for some opinions, some reports, or some oversight. They have to reach out to trustees as well. Or they might need to reach out to the board of directors. So what board is doing? Authorization by board. What board is doing? Board is established, approve and support the mandate of internal audit function. Means this is another part. Part 2 covers CIA. Part 2 covers internal audit functions as well. I believe the part. So it's the primary responsibility of board. So to allow the internal audit functions to happen. So there is an agreement, there is a consensus between internal auditors and board of directors and the TCWGs. How they mandate it? The mandate specify internal audits authority, that what internal auditor is able to do, what is his roles and responsibilities, and it is documented in the charter. Anybody of you heard about the engagement letter in your day-to-day life, in your practical life as well? Engagement letter.
So yeah, in basically in consulting we know, so we in consulting we do get an engagement letter, basically the which defines like the kind of the scope or the audits that we are supposed to be performing, and the timelines that are expected, and broad scope that we need to cover. That's the
Right.
engagement letter
Absolutely right.
there.
Similarly, internal audit charter page is sold for internal audit. The mandate, but specify that our scope, what is our scope? And it is defined by the board. Because internal auditor is directly and with a closely work with the board of the company and the TCWGs. We are not like external auditors, where we have to we are not closely working with the management. We are mutually working on the checking the financial accuracy. We are a part of the board itself. You can learn like this, that we are a part of the board. We are here to help the board and the management to improve their functions, to achieve their objectives. That's why this particular mandate specifies internal auditors' authority, roles and responsibilities, which is the scoping functions, and is documented in the internal audit charter. It gives internal audit the right to provide the board and senior management with objective assurance, advices, insights, and foresight. Thus, internal audit has dual reporting relationship with board and senior management. Means we are at one point, we are also working as an advisory functions and assurance services as well. That's why I dual reporting relationships. The mandate should be performed by bringing a systematic, disciplined approach to evaluating and improving the effectiveness of governance, risk management, and control process. Now let's talk about the standard 6.1, which is internal audit mandate. It says that chief audit executive must give board and senior management the information to establish the mandate. So when you are looking into the audit internal audit mandate, what it states that your chief executive must give what the information required. If there are any laws and regulation, how we have to perform our audit internal audit functions, who define it. We as an auditor, as a chief audit executive, give it to the board. They will look into the requirements and they will attest and approve it. As you are aware that many financial services sector companies have stringent controls, stringent regulatory reporting. Why? Any idea? What is the difference between financial and non-financial sector?
Financial sector is all about banking, NBFCs, and others, and non-financial sectors like which are not related to finance, like banking, NBFC, and these. So collectively, we said BFS sector for finance.
Right. See, in the non-financial sector, companies might take some of the licenses as well, but there is no strict regulatory requirements applicable to those companies. But when it comes to banking, when it comes to insurance, NBFCs, there is a separate regulatory body for them. In India, we have SEBI. In India, we have RBI. In India, we have IRDs. Yeah, are you saying something?
Sorry, I was just saying that because there's the impact or the stakeholders involved in case of financial sectors are huge, therefore the regulations are huge.
To some point, see, as far as stakeholders are concerned, if it is a listed company, ultimately public interest lies here. For example, if we're taking example of Reliance, it is not a financial sector company, but the role that company plays in the economy or in the everybody's life is very important. But there is no specific regulation defined for Reliance, but it is defined for SBI or ICICI Prudential, HDFC or Go. Why? Because it is plays a very key and important role into day-to-day life of public. If anybody fails to, then if there is no regulations on them, they will function as per their own understanding. They will not follow any. There will be no regulation to oversight them. There is no legal requirement.
Financial companies will deal with the public money, basically. So there are more
Yes,
stringent regulations.
right. They are run by the public money. Like we are the deposit holder. We have deposits in the banks. We are taking term insurances. We are taking health insurances. And in case of contingency, in case of any fraud, what happened? We have taken multiple real life examples when one bank, for example, the payment bank, what happened? Due to non-compliances, RBI put a strict bar on that, then no one going to deal with it. Is it a financial fraud? Is it a financial irregularities? I believe no. Only a compliance failure. That's why internal auditor plays a very important role here. Because of financial sector companies have stricter laws and regulations and the legal requirements, the role of internal auditor also enhances. Our responsibilities gradually increase as well. That's why we have to be very careful when we define our scope of work with the board and the TCWGs. I have that experience. I worked with FS sector for almost 6-7 years. I worked for so many big banks. I can give an example that when we are dealing with non-FS sector, the risk is not that high. But when we're dealing with the FS sector, the audit risk is really high. We have to advise them on a multiple front, not only the financial, but on a multiple front. We have to separately performing the regulatory reportings for them. We have to do some compliance audits for them. There are multiple kind of advisory and insurance services go hand in hand. That's why when we are preparing an internal audit mandate, from the examinations perspective as well, you have to understand what is the scope of work and where it is provided in internal audit charter. And who approves it? DCWG and board. I'll explain you about these practical life examples as well. It will really help you going forward when we step into the relevant topics. If a law or regulation prescribes the mandate, the charter must include the legal requirements. Means if there is any legal body, regulatory body, which defines that that particular company, either the banking, insurance, or any other NBFC company, needs to discharge their duties by submitting the report, by complying with their specific laws. So our internal audit charter must include those legal requirements. That's why it is really important. The chief audit executive is who? The chief executive auditor is a person in the senior position responsible for effectively managing the internal audit functions. So CAE is within the organization, which we called as head of the internal audit, manager internal audit. The terminology, the designation name might be different, but one person who is at a very senior position in the company and who is responsible for effectively managing the internal audit functions. For example, just take XYZ company. You are the internal auditor, but who is responsible for this internal audit mandate? Is it you or is it you and CAE? There must be one person in the higher senior position within the company XYZ who is working and responsible for this mandate and the internal audit functions. Because ultimately, the management, middle level or a top management never directly comes to the internal auditors by providing this data, this documentation, this change in scope, something. First of all, we have to communicate it to CAE, and then he or she will communicate it to the board to get that mandate. That's how the internal audit function runs in the practical life as well. There must be most of the cases there must be an internal audit manager and chief audit executive within the organization at a very senior position, who is well aware about the standards and ensuring the quality of internal audit services. The specific job title may vary depending on the organization. I tell you, it be internal audit head, be it internal audit manager. Title might be different from organization to organization. The board and senior management decide the extent and types of internal audit service to be offered. I explained to you this before, that it is a responsibility of the board and the senior management to decide the extent and the types of internal audit services that can be offered. Means ultimately it's their organization. They are not performing any external audit here. But CA should work both with internal and external auditor. Because sometimes what work we are doing as an internal auditor, some of the work has to be tested by external auditors as well, even if we our own work. Because external auditor report plays a very important role. So they might ask that, hey, can you provide us this documentation? You already tested these controls, you already evaluated this compliance process. On a sample basis, they can evaluate our work as well. So CA should work with us as well as an internal auditor and with external assurance service providers as well. And what it result? This corporation helps everyone involved to clarify his or her specific roles and responsibilities. Our role is different as an internal auditor, and external auditor assurance service providers have different roles and responsibilities. So CAE work as a bridge between both of the functions. CAE also must document or refer to the mandate of the board approved charters. We already discussed about it. CAE should regularly assess whether any changes in the organization require a conversation with the board. What kind of changes come to your mind when you're reading this? Anybody of you? What kind of changes can be possible?
Changes in any changes in any particular laws or regulations or
Agree.
any management change, as in, like, if I have to give an example,
Mm.
some particular merger or acquisition that has happened, which will lead to your changes in the. So basically, if you have a merger, your scopes and your review areas will increase, and how that has to be taken into account.
100%. Excellent. So who is responsible to assess this? The chief auditing secretary. Whatever changes happen, I be it merger, be it amalgamation, be it any control other changes, any processes and improvements, say assess this. How? By requiring a conversation with the board, senior management regarding audit mandate. If there is any need in change in audit mandate, CA is the right person who will take this proposal to the board and the board approves it accordingly. If such changes are needed, the CAE must work with these groups to make sure that internal audit's power and function and duties continue to support the organization's goals and strategies. What board must do? Board must talk with the CAE and upper management about the proper authority, functions, duties of internal audit. Approve internal audit charter, including the mandate, scope, and type of services. What senior management needs to do? Join the conversation with the board and the CA to share thoughts on what board should expect from internal audit as they create its mission. Ultimately, board come up with vision and vision statements. But there should be a regular conversation with the senior management and the top management on the same thing. Also, senior management encourage support to internal auditors role. What happened if we started our internal audit, but we are not getting the adequate documentation which is required to perform our duties? Are we able to do that? I believe no. If you're asking for some particular documentation from one particular process of the senior management, if they denies to give it to you, or they are not encouraging it, we are not able to perform any of our functions. That's why senior management must encourage support for internal auditors too. Across the organization means across the process, be it HR, be it FR, financial reporting, treasury, you have a payroll department, you have purchase department, sales department, be it any function. It's the responsibility of the senior management to encourage every one of them. Now, let's talk about about the implementation. The CAE informs the board and senior management about the characteristics of an effective internal audit functions. CAE shares knowledge about the standards, relevant laws and regulations, just as Neha just explained about changes in laws and regulations. The laws and regulations keeps on changing, but we have to adopt, we have to function with our relevant and present applicable laws and regulations. So CA's responsibility is to share that knowledge of changing laws and regulations to the board and result of research into leading practice. CAE should also discuss with the board and senior management the internal audit mandate and other key elements of internal audit charter. What can be these elements? First is authority. Are we talking about the authority of board here or internal auditor? When you recall this word authority, what comes up in your mind? As you are aware, we discuss about the scoping function, audit scope. And audit scope itself covers that auditor should grant unrestricted access. Means As you can see here, this is unrestricted access. The same thing, if you have doubt on something while testing, while functioning or your internal audit functions, you have some doubt, you have to require some documents, but management denies to do that by saying that we are not providing you those kind of documents. Is it an unrestricted access or restricted access? It's a restricted access because you are not able to discharge your duties on a timely basis. Yes, Vinod. So authority is based on a direct reporting relationship with board, allowing for unrestricted access to the board and all organization activity. For example, records, personnel and physical property. The main job of internal audit team is to carry out audit tasks and provide audit services. Sometimes the CAE, Chief Audit Executive, may also have additional duties to include risk management compliance beyond just internal audit. In assurance service, I'll explain you about compliance auditing because it is really, really important nowadays. Because earlier, management is only more concerned about the financial audits. Now, compliance becomes a very important part because of compliance failures. We are seeing many scandals, many fraud happen. Responsibilities consist of obligations and accountability of roles, as well as expectations of the key stakeholders. They may include performance of audit services, communication, attention to the compliance with laws and regulations and policies, conformance with global Indian audit standards, and other activities. The scope of service of internal audit function covers the organization activities under the review by internal audit function. I told you the scope may include all activities, assets, personnel means discussion with the employees. You can access anybody, any employee from the organization when it comes to asking anything, getting some information. So it should be all activities, assets and personnel, and may be restricted to subset defined by, for example, geography. Restricted access can be possible based on the geographies as well, based on the regulations as well. But at a very initial stage, it should be unrestricted access. Scope may specify the nature of services. As we discussed about difference between assurance and advisory services. But when we are defining our scope, so we have to define the nature of services we are going to give. For example, we are giving advisory and assurance services on a financial statements front, compliance with laws and regulations, or any other limitations. Internal audit services maybe simply be assurance and advisory services or maybe more specific. I tell you, internal audit function is a broader concept. Sometimes we are giving assurance and advisory services both. And it may be more specific, such as performance audit. I told you, we are only doing the segment auditing. We are not looking into entire internal audit control environment of the company. We are only working appointed for assurance regarding internal control over financial reporting, which is ICFR. Anybody knows about ICFR? The point here, the word comes here. That's why I want to discuss a bit about it. ICFR. What is it all about?
Basically, it is kind of SOX for Indian companies.
Yes.
So
This is about
internal control or financial reporting.
that word is itself saying, but what it is exactly all about.
So it is basically what I was saying is it is like SOX for Indian companies. Basically, you're testing the controls which are directly impacting your financial statements, basically, which ultimately culminate into your balance sheet and P&L statement numbers that flow into those, how those numbers are getting generated and what controls are surrounding the same.
Right. There's the two things. Let me give you a bifurcation. ICFR is a terminology which we use from SOX Act, which is US based act. When it comes to Indian Companies Act, we will use the word IFC, not ICFR. The ultimately purpose is same: internal control over financial reporting or internal financial controls. Ultimately, the same perspective. We are here most concerned about the financial reporting information. We are giving assurance only on FR functions, not on payroll, not other functions. Major focus area is financial, not and we will left compliance and other things are set aside, and which is this why called as ICFR. And as per US law, we have to give a SOC 1 report for ICFR. ICFR covers in SOC 1 report. I'll show you the SOC 1 report later on, where we are providing these services and where we are mentioning about opinions as well. In their performance of services, internal auditor should determine that their operating and program objectives have been established and conformed with the organizations. So now there might be some circumstances to justify a follow-up discussion with the board and senior management of the internal audit mandate or other aspects of the internal audit chart. These conditions may include a notable change in standards. If something change comes up from the regulators, for example, IA, so if there is any change in standards, we have to follow up discussion with them. If there is significant acquisition or reorganization, as they are just before it, because of amalgamation mergers. If there is any significant change in board or senior management, means if your entire board resign and you have members have to appoint a new board. So that's also a part of follow-up discussions. A significant change in strategies, objectives, risk profile, and operating environment. A new law altogether comes out. As you already aware, new Income Tax Act passed by the Parliament. So it is altogether a new law. Existing internal auditor who is performing their internal audit function, they require a follow-up discussions with the management as well. That hey, the new law comes up and now it can impact our existing scope and services can be revised. It can be discussed on it. So the chief audit executive should formally consider any changes at least annually. So there should be a follow-up discussion on an annual basis at least. It can be monthly, half-yearly, basis or your own organization, but at least annually. The chief audit executive, just keep this word in mind because it in examination you can get this question as well. That they will give you an example, at least monthly, at least annually, or something like that by a scenario. You have to understand at least annually should be there, because if you're doing on monthly basis, there is nothing wrong in it. If you're doing on half-yearly basis, nothing wrong in it. But you should do at least annually this function, CAE. Now, the next point is the CAE coordinates with assurance providers and advises the board about how other functions may contribute to the internal audit mandate. By helping the board understand the roles and responsibilities of other assurance providers and regulators, the CAE may clarify an appropriate mandate. So this is all about your CAE and the purpose of internal audit. So from where we start from the purpose of internal auditing. Now we will move to internal audit charter. Before that, do you want 10 minutes break? Shall we take a 10 minutes break?
Yes.
Okay.
It's okay with everyone.
Yes, fine.
Okay. We will resume our work at 10:20 sharp.
Okay.
Now we are going to start with internal audit charter. And next, we consider the internal audit charter a foundational document for any internal audit function. The audit charter formally defines mandate, authority, and responsibility of internal audit activity. According to IAS global standards, an internal audit charter is required. It is a formal document that includes the internal audit function's mandate, organization's position, reporting relationship, scope of work, and types of services and other specifications. I show my screen for briefing. In other words, the charter spells out who the internal auditors are, what they do, and whom they report. Just take an example. It is typically the state that the chief audit executive reports functionality to the board, ensuring organizational independence and administratively to the senior management. It will also define the scope of audit, say financial, operational, compliance, and IT audits, and any limitations on the scope. Now I'm showing the screen for the now, according to Standard 6.2, the Internal Audit Charter, the CAE, must develop and maintain a charter that specifies at a minimum of the following internal audit functions. First, purpose of internal auditing. Adherence to the standards. We have our internal audit standards defined by IIA. So our internal audit charter must include that internal auditor may adhere to the standards of auditing. Internal audit mandate, which we already discussed there, including scope and services, and the board's responsibilities and expectations about the management support of internal audit. Organizational position and reporting relationships. The chief audit executive must confirm that proposed charter accurately reflects board and senior management understanding and expectations of internal audit. This is very important thing. Just highlight this if you want. There might be different organizations, different board with a different expectation from the internal audit. Agree? So for those understanding and expectations, the chief audit executive time to time communicate with the auditor, board and senior management, and to take an understanding that how they want and at what level they want internal audit functions to perform. Is there any restricted scope or there is a wider scope in the audit works for? So this is something which CAE confirm with the proposed charter which reflects accurately about the board's senior management understanding and expectations of internal audit. Also, the board must, what board needs to do? Board must talk with chief audit executive and the senior management about additional subjects that should be part of internal audit charter. Means if there is any additional subject which board wants to highlight, so they have to first reach out to chief audit executive, discuss about their understandings and requirements, and must include those things in the internal audit charter so that internal audit functions operate effectively. Whatever they want, that should be documented in this charter. Second, endorse the internal audit charter, which outlines what purpose, along with the range and kind of services, means assurance, advisory, compliances, regulatory, whatever be the scope, they have to define there. Review of internal audit charter with chief audit executive to evaluate any modifications needed due to changes within the organization or the nature of services provided, such as hiring a new chief audit executive, shifts in the nature and complexity of the risk of organization faces. For example, merger happens, demerger is there, new regulatory regulations comes up. So whatever risk and complexity is facing by the organization, so they have to review it and approval to offer the advisory services. This is something which board needs to understand. And senior management must communicate with the board and chief audit executive concerning management's expectations that deserve evaluation of incorporation in the charter. Now let's talk about what we covered so far. That authority, responsibilities, we discuss about it. Now I'm giving an example from your key exam point. So the internal audit charter must be approved by the highest level governing body. Anybody knows about the highest level governing body names in the chat group? Can you provide me? Highest level authority. Anyone else? Highest level authority. It's board or audit committee. Stakeholders are not uh, governing bodies. Board and audit committee. Because ultimately the governance lies with them. Yes. Just take a typical exam scenario that it may ask, which of the following is a part of internal audit charter? And the answer could be the CAE's reporting lines or the scope of internal audit activities, both of which are indeed in the charter. Conversely, specific audit findings would not be in the charter. See, you will get four options in the examinations. So similarly to other earlier example, just to understand the question correctly, if it is asked that who is the following part of internal audit charter, so we already understand that it's CA's reporting lines and the scope of internal audit activities both. But will it cover specific audit findings? If yes, why? And if no, why not? I'm giving an option that specific audit findings covered in the internal audit charter. Is it right? Is it wrong? And why? Any reason of it? Right, yeah. This is a part of report, not the charter. Charter covers your authority, scoping, changes in the scope. But charter is at a very initial step of any audit engagement. But audit finding covers in the audit report, which is the last step. So obviously it will not cover here. I also want to give you an illustration example. Just consider a government agency setting. The internal audit charter might be presented to agencies oversight committee. It could state that internal audit office has unrestricted access to all records, personal and physical properties needed to fulfill its mandate. This is often explicitly written into the charters to prevent management from blocking information. So in the exam context, if a scenario described auditors being denied access of certain documents, one could point to the charter as a source of authority. Audit team should insist on the compliance with the charter's access clause. Are you getting my point? If you have a scenario-based question in the examination, and if one of the question is auditor is not providing the unrestricted access, and what he or she needs to do. First of all, he has to refer the charter. If the scope is in the mentioned in the charter, you can utilize those scope while discussing it with the company's management. Also, the charter also details authority. For example, when auditors can engage consultants or if they need additional approvals for certain type of works. You remember we are sometimes auditor uses extra auditor experts knowledge. Who are the auditor expert? Anybody knows about it? Auditors expert. Anybody heard? If you heard about this terminology before that.
Yes, like that actuarial certification and all.
Okay. Means, see, auditor cannot be expert of everything. For legal matters, we might need to engage advocates. For valuation matters, we have to engage valuation experts. And for actuarial valuations, we have to engage actuarials as well to perform, to discharge our duties. So authority, if when we chart in the charter we define about authority, so it is our auditor's authority as well that we can engage our the consultants on if we need additional approvals for certain type of works. So it defines the responsibilities and internal audit function may provide assurance or advisory services or any part of the organization, but it should not take on management roles. For instance, your charter might explicitly state that internal auditors will report on risk management process, but it will not have any authority to approve or implement risk management measures. Are you able to identify the difference? Charter might explicitly state that internal auditors will report on a risk management process. It is our, as an internal auditor, it is our responsibility to report on the risk management processes. But does it lies on us as well that we have to report on implement as well the risk management measures or approve it? But it's a difference. I'm typing here for your references. I want to understand the difference from here.
Auditors, as such, are you identify whether risks have been mitigated or risks have been addressed. You identify the risks as well, but you suggest controls, but you do not implement controls. That is the part which management has to do. If you start implementing the control, it will lead to conflict.
Yes, yeah. So charter in the internal audit charter, we might include that as an internal auditor, we are going to report on your risk management process. But we have no authority to approve or implement it because this is a management job, not our job. Our job is to only report on the processes. Now it's on management whether they are approving those recommendations, those exceptions, and those areas, risk management areas. We are not as an we cannot do that. Or we are not going to step into the shoes of the management. We only report on it and management approve and implement it. One more point we have discussed the key part of the charter which established the duties and accountabilities of chief audit executive. So we already discussed about it. So just take a summarized view of it. So it will describe the performance review processes. For example, the chief audit executive performance and composition are overseen by board with management input. It may also specify that board annually reviews and re-reviews the charters. As we already discussed, it should be reviewed at least annually. So we already discussed about it. So indeed, the best practice is suggesting reviewing the charter periodically, particularly when major changes occur in the organization. Just take an example, a tech company is expanding internationally, might update its charter to cover new operations or compliance requirements abroad. Let's take an example of your exam ready. I'm giving an exam ready example as well here. So imagine the exam states that the internal audit charter must include the internal auditor's rights and responsibilities and ask which item is not required. You're already aware which is required, but sometimes question comes up that which is not required. So the non-required option might be something like internal auditor's budget. Does internal audit budget covers in your rights and responsibilities? My question here is, if your exam question states that internal audit charter must include internal auditor rights and responsibilities and ask you which item is not required. So my question is, does internal audit's budget is mentioned there? If I'm giving you a point, charter should include the right to access all data and resources and require the adherence of IIA standards. But budget is usually approved by board and not necessarily spelled out in the charter. Budget is not something which is a part of your internal audit charter. Internal audit charter what covers what? Scope, authority, responsibilities. So if in a summarized view, the internal audit charter is a formal constitution. Just remember this word constitution. It is very important. Constitution of audit function, which defines what? Mission, scope, authority, and reporting relationship in the clear terms. And it is approved by board or its equivalent. By documenting the internal audit mandate and the support it has from the senior management, the charter helps ensure that the audit activity can operate independently and effectively. Whenever you see charter related exam questions, just recall that it covers mandate, authority, scope, organization's position, and is a product of the board's approval. This is all what you need to remember from an exam questions from internal audit charter. You will definitely get 1 or 2 questions from this subject. Now we will learn about some implementation criteria. So as you can see here, the requirements of charter are outlined in subunits 1.1 and 1.3, which we already discussed. The charter should describe administrative reporting responsibilities, such as process for approving internal audit functions, human resource administrations and budgets, approving CAE expenses and reviewing CAE performances. If laws or rules define how reporting should occur, they should clearly explain. The CAE should tailor the internal audit charter to reflect specific characteristics of organization. This customization is important for shaping our internal audit's mandate, scope, and services it provides. CAE usually shares a final version of internal audit charter at the board meeting for discussion and approval. So whatever the final version CAE prepares, it will go to will become an agenda for board meeting. They will discuss there and approve it and give a sign off. The chief audit executive of the board needs to decide how often they will examine the charter to ensure that it still supports the goals of internal audit function. It is a good practice to review the charter at regular intervals. Refer to it whenever there are questions about internal audit rules and make updates when necessary. There are following topics as well for the inclusion in the charter. Safeguards. What we need to safeguard: objectivity and independence, including processes for potential impairment and periodic reevaluation to ensure they are still effective. It happens that during the course of your audit, your objectivity and independence might be impaired. What you need to do? The periodic reevaluation can ensure that they are still effective. At any point of time, if your independence is impaired, what you will do? You have to reevaluate your position and you have to take mitigating actions. Second point is unrestricted access. We already discussed about it. That which included how data, records, information, personal and physical properties are accessed to fulfill the mandate. Communications, including nature and timing with the board and senior management. Audit process, including expectations about communication with management before, during, and after an audit. and how disagreements with management can resolve. Sometimes it happens, you have an opinion that your particular controls are not operating effectively. Either the design is not good, or the operations is not good, but management does not think on a similar level. So there might be a disagreement between your opinion and the management take. So you have to set an expectation with them, have a communication with the management to resolve these things, quality assurance and improvement, including expectations for internal and external assessments of internal audit and communicating the results, approvals by board and management. We covered internal audit charter. So from this chapter's perspective, now we left with two more points, uh, impairment of independence and role in risk management. So let's talk about
Nitin, this is Ravani. Before going to the next topic, am sorry, like I have a little confusion between the mandate and the charter. So mandate will be the scope and it describes the scope and responsibilities at a higher level, and it will be approved by the board, right?
Mhm.
And on the charter, it will be described more responsibilities of the internal auditor. I mean, like it described in a detailed way, like what for which function we are doing it, or like that. The scope is like if I'm not wrong, the scope is like an whether we are providing an advisory service or an assurance service in the mandate, right?
So basically, the audit mandate, which we discussed, is the authority and
Mhm.
responsibility granted to internal audit function. But as you compare from internal audit charter is a formal document, and the audit mandate is not a document. Audit mandate is
Okay.
something which outlines your scope, objective, and expectations of internal audit from senior management or
Hmm.
audit committee. But when you learn about looking from internal audit charter purpose, so it basically defines organizational position, reporting relationships, rights and responsibilities, and operational guidance.
Hmm.
Internal audit is a
Okay.
formal document. There's a major difference. Whatever the audit mandate defines, discuss, and approve, that you have to incorporate in the charter.
Okay. So the charter will also contain the mandate. Mandate.
Yes. The
It is
scope,
part of the.
says looking from a scope perspective, I give you a summarized view. If you're looking from audit mandate scope, it says about strategic authority and expectations, which internal auditor has to do. But internal audit charter is something which give a roadmap to internal auditor that, hey, you need to do this kind of operational work. This is your operational framework and procedures you have to perform. If you
Okay.
look about what is included in both of it, audit mandate only include purpose and scope. Audit mandate is
Hmm.
include only purpose and scope, whereas your internal audit charter include mandate, which is purpose and scope, plus it also include roles, responsibility, and rights. So internal audit
Okay.
charter gives you broader coverage. And
Okay.
who approved it? Typically, audit mandate is approved by, as you said, the audit committee, senior management audit committee, but internal audit charter is typically approved by governing body, which include audit committee and board of directors.
Sorry, mandate will be approved by board and charter will be approved by senior audit
No,
committee.
no. Audit mandate is approved, typically approved by senior management or audit committee. But when it comes to internal audit charter, typically approved by governing body, which includes board of directors as well.
Sorry, got confused with board of directors and audit committee.
Audit committee, see, audit committee consists of board of directors itself, but we will give a different name as per the our Indian Companies Act or SOX Act. Audit committee is a coalition of directors only, But as far as governing
Mhm.
body is concerned, there is no such difference. Audit committee is also a TCWG. I'm
Mhm.
saying audit mandate is approved by senior management audit committee both or any of them. But internal audit charter typically approved by governing body who's a audit committee or board of directors. Senior management is not covered in board of directors thing. Board of directors are typically governed under the governance TCWG. It's only governed in the TCWG. Or
So CAE will be reporting to audit committee,
CAE. Yes,
is part of audit committee.
I'm not, you are asking
The
the
hierarchy
CAE
of
reports to
CAE.
whom?
Yeah. So CAE is
CAE
part
is
of
at a
audit
senior
committee.
position. CAE is a part of,
Uh,
and be it any title, is a part of a senior management and the reporting directly to the board and audit committee.
okay.
You're confused a bit.
Yes, again. So
Okay.
CAE is part of audit committee. He is the head of the audit committee, senior management.
Audit committee, CAE is Chief Audit Executive. He is
Hmm.
executive, be it
Hmm.
any title, but whom he or she should report to the board and audit committee.
Hmm.
Ultimately, reporting lies to the top management, those charged with governance. So CA
Okay.
will report directly to the audit committee or board of directors or TCWG, which we call as a TCWG. And if you're asking
Okay.
from the usage perspective, audit mandate is using for defining the intent behind the audit. But internal
Okay.
audit charter give you or guiding you the execution part. You can
Yes.
understand from the planning and execution perspective. If from
Okay.
example orientation, just divide it like this. If it is comes to audit mandate, it's your planning step. When it comes to internal audit charter, it gives you a field work kind of things and, about a guiding executions. This is the only difference,
Okay.
majorly.
Okay. So audit the mandate would be defined by board of directors and senior management both.
Senior management audit committee, they can approve it defined by any one of them. CAE directly work with the audit committee and board of directors, provide their his recommendations and requirements, and then they will approve it.
Okay. And charter would be prepared and approved by audit committee.
Prepared by audit. Where I'm not understanding where you're confused.
No, I wanted to understand who approves the mandate and who approves the charter.
Charter, charter is prepared by CAE, who is responsible
Okay.
for drafting it.
Okay.
Internal audit team will assist him by developing the content because ultimately internal audit they are who wants their scope to be in place. Audit committee or board of directors approve it typically in the board meeting.
Okay. Okay. Got it.
And when it comes to audit mandate, generally the when it comes to purpose and scope, internal auditor's role is not there in the audit mandate because that is something which is an internal discussion with the of the company, CAE and senior management audit committee. So they come up with the mandate and they include the mandate in the charter along with the roles, responsibility, and rights of the internal auditor. That is very simple difference.
Thank you, Nitin. Now it got clarified.
Any other queries?
No other questions. You can continue.
Uh, let's start with impairment of independence. So independence and objectivities are the bedrock of internal audit. We already discussed in section 1.3, which explores how these can be impaired, what auditors must need to do. So just recall about the independence at organizational level means freedom from the conditions that threaten the ability of internal audit functions to carry out its duties in unbiased manner. Objectivity we learned about at individual level means maintaining an impartial mental attitude and avoiding conflicts of interest. So according to IIA's attribute standards, if independence or objectivity is impaired in fact or appearance, the internal auditor must disclose the details to appropriate parties. I can give you an example. What kind of situations can create an impairment? We'll discuss from the books as well, but I'm just as something for a discussion's perspective. What kind of situations can create an impairment? The standards interpretation lists common threads. For example, personal conflicts of interest. Can you give anybody of you give me an example of personal conflict of interest?
Close relative is working with auditing.
Might be the auditor is the director in the company was an auditor's spouse. So it ultimately led to conflict of interest. It might be result due to scope limitations. That when it comes, that auditor come up with some investigating or some frauds or something, some irregularities, then your scope should be limited by the management. That hey, you cannot go beyond this. So it is also a common threat for impairment. They can restrict on the access to records and the employees or the personnel, or any resource limitations. For example, severe budget cuts can do. So these all can impair the independence. I can give an example. Suppose a bank auditor was promoted to the head the loans department 2 years ago and is now asked to audit loan officers' work. So this is a classic example of conflict of interest and self-review. That means he is heading a loans department and now he is reviewing the audit loan officer's work. So it is kind of a self-review thread. Is it possible for him? No. How he can review
But
his
it is
own work?
2 years, but it is 2 years back, right? I
It
mean, if
happens, but
he's
how he
done
can
with it.
review it his own work in the same bank?
But there will be there will be a cool off period. Like if once upon a time, if he is then head of a loan department, that doesn't mean that he or she are not supposed to perform an audit on the loans. But once he is done with the cool off period, generally it would be like 1 year. He
The cool-off
can go
period
ahead
comes
and
up, but here I'm taking a normal example of giving the self-review thread. And even a cool-off period, he can review post that, not during his time. If he told to review the audit the work which during he was holding any position, how it will ultimately comes as a self-review thread. Or in my example, there was nowhere mentioned in my example that he left that department. I simply mentioned that suppose a bank auditor was promoted to head of the loans department 2 years ago. Now he is asked to audit. Means one auditor earlier he was auditor. Now he work as the head of the loan department. Now he is reviewing his own work. Whatever is happening in the department, it's a self-review thread. So auditor is reviewing something they
now
are
he is not
responsible
part of the
for.
auditing team. He can support only one
One thing is at a time.
designation agency. Yeah, either he should be a head of the loan department or
Or he should be an
he
auditor.
might be part of auditor.
Right. That's what I'm trying to say. The self-review thing. In fact, the standards explicitly say objectivity is presumed to be impaired if an internal auditor provides assurance service for an activity for which the internal auditor has responsibility within the previous years. In an exam question, a question might describe that such a scenario that if asked if independence is impaired, basis this scenario. So obviously, answer should be yes. An auditor should remove from that audit. Other examples are the impairment include influence by management. For instance, if chief audit executive is pressurized by the CEO of the company, which is a higher authority, to only report certain audit findings, or if management tries to limit the scope of audit after the plan is approved and it is mentioned in the charter. That also impairs our independence. Yes. The user uploaded the CIA outline enforces these examples. Interference like failing to provide timely information, restricting access to information, personal or physical properties, or undue limiting resources, which is budget, are all impairment and independence examples. Similarly, if an internal audit team is denied access to department's files during an engagement, what will it result to? What will you call this act? Anybody? If internal audit team is denied to access the department's file during the ongoing engagement, what we will call it
Yeah,
as?
yeah, definitely it is an impairment. That should be documented in the charter.
It is an impairment. Like an impairment due to what?
Accessing
Yeah.
the required information to complete our duties.
What is the exact word? As per in exam, we have to identify the exact word of it. I explained it earlier. Just think about it once.
Authority.
It's called a scope limitation. In exam, you will heard about the scope limitation. You will see the scope limitation word. Ultimately, when it is already mentioned in the scope that the management will provide you unrestricted access. Now they denied the access, so they are constitute as scope limitations now and impaired your independence. So such examples are likely to appear on the exams as scenario questions. So recognize them as threats to independence. I'll give you more examples as well. Uh, but let's start discussing it from your book as well. Are you all able to understand what we are discussing? Any concerns? So impairment of independence, we already discussed about it. The purpose of internal auditing cannot be fulfilled unless the chief audit executive directly report to the board, qualified, and is positioned in the organization so that the function can discharge its services and responsibilities without interference. You have to remember these words. This can help you to answer your questions. It is really important. It is not saying how it can fulfill. It is saying the purpose cannot be fulfilled. And these are the main steps which we need to remember that until and unless CA is not performing these things, is not able to match these things, the purpose of internal audit fails. So according to principle 7, which is called as positioned independently, the board established and protects the internal audit functions independence and qualifications. Independence is, as we already discussed, is a freedom from conditions. Freedom from conditions. Let's push a pressurize here. That impair the function's ability to perform responsibilities without biasness. 7.1 standard organization independence states that CAE must confirm to the board the organizational independence of the internal audit function at least annually. Even this is also highlighted in bold letters. You have to take care of these words because this can help you to answer your questions. First point, the CAE also communicates the instances which independence may have been impaired and actions of safeguard address the impairments. So it happened that we discussed about one case where the scope of limitation applied. So what other options we have? Do alter design immediately if your scope is limited during the course of engagement? Or you have any other options as well to explore? Any answers? So if is there any threat on your independence because of any reasons? So we have to understand what are the safeguard measures we can take, how we can resolve it by the discussion with the management. And even if your scope is limited and you're not able to perform your duties, so you can resign after that. The chief audit executive must document in the charter the reporting relationship and the organizational position of internal audit function determined by the board. The CAE should have many opportunities to communicate and interact directly with the board. Board meeting agendas and minutes often are the evidence of internal auditors' organizational independence. Yes, Santosh, you're right. We can revise the scope of audit due to limitations, but also if your scope is limiting and your independence is impaired, you have to discuss with the CAE, and CAE is discuss the same with board and try to resolve it. If after that your independence is still impaired, you can either put that in your audit report or you can resign from the auditing.
So, but in every case, there must be a limitation of scope of limitations.
Must be. I'm not becoming clear solution.
Like in every organization, there must be kind of some people who just make hurdles in some like providing the documentation, providing the access issue, right? Sometimes they just deny to enter into the premises, some specific premises that is like sensor issue.
Right. See, that's something which, if any point of time you think that you are not able to work in as you are expected to do, what you will do? You have a CAE with whom you can have a follow-up discussions. You can have the discussions on your impairment of your independence, and then CAE will put it across the board. Board will discuss during the meetings and the agendas. They will incorporate it and come up with the solutions of it. Either they can direct the management or address the root cause which is impairing your independence, and then you will start functioning.
You are right, but it also sometimes it also take more time, and we have limited time to conduct the audit and complete that.
So this is the regular communication going on. So it is not external audit where we have a limitation of time. It is going hand by hand throughout the year. So obviously in the immediate next board meeting, if they can resolve it or any timeline, if they can provide us, we, so if that was not mitigated in that particular time frame, then we can take a decision as an auditor that whether we want to continue as an auditor or we will report the same threat during our audit report as well. We have all rights to do that. It's never been a case that all the time we have to resign from the audit engagement. If we are communicated to the CAE and there is also after that you are not able to make your opinion and you are not able to resolve your impairment of your independence, you can write it in your audit report. No one can stop. CAE must discuss with any rules that impair. I told you right. The CAE must discuss with the board and senior management any rules and responsibilities that may impair the function's independence and recommend the safeguards, how we can safeguard it. When CAE take an additional rules outside the internal auditor, the responsibility, the type of work, and any protective measures must clearly outline within the internal audit charter. If these responsibilities also fall under the scope of internal auditing, then the alternative methods must be put in place to ensure proper oversight. This could involve hiring an independent and skilled external audit assurance provider who will report directly to the board. If CAE takes a non-audit task temporarily, an independent third party must oversee those areas during its time and for following 12 months. So again, we come up with what board must do, what senior management must do. Just take a read of it. What board can do in this case? They can create a direct connection between CAE and internal audit team, which helps the internal audit team effectively carry the responsibilities, approve the hiring and dismissal of CAE if he is not supporting the internal auditor or if impairment is due to him as well. Board offer the guidance to the senior management. For example, if somebody from any one of the process from a senior management is putting a scope limitation, what board can do? Board can provide guidance to them that, hey, please assist in assessing the performance of compensation or not. Sorry. To assist the auditor to perform their duties, to provide the unlimited access or unrestricted access. But here, if CA is impairing that, so we can offer senior manager assist in performance and compensation of the CA. Allow the CA to have discussion with the board about the important sensitive issues, including the possibilities of holding meetings when the senior management is not present. Required that the CAE be in a position so that services and responsibilities can be performed without interference, including the ability to bring matters directly to the senior management, escalate them to the board. These are the safeguarding measures basically. But we have you can read it across. We will move through implementation. So in the implementation thing, internal audit is most effective when functionality and it directly reports to the board. This relationship enables performing services and communicating results without interference or undue limitations. Example, failing to provide timely information, restricting access to information, personal physical properties, unduly limiting resources means budget reduction. Give me a moment. So, the chief audit executive's administrative reporting relationship is often to a member of the engaged management. As CAE has dual reporting relationship with board and management because he is in the somewhere in the middle. He is directly dealing with management as well and board as well. It enables across the access to the senior management and authority to challenge management's perspective. The leading practice is for CAE to report administratively to CEO or equivalent. Although reporting to another senior officer may achieve the same objective, giving safeguards. So impairment of independence, which may include the CAE lacks direct communication with the board. That you come to CAE and telling about the management scope limitation, but he is not directly communicating with the board. But in result, that's still there. Management attempts to include limitation of scope services previously approved by board and documented in the charter. Management attempts to restrict access. Management pressurize auditors to surpass and change finding, which we discuss about it. Reduction in internal audit budgets leaves the function unable to meet their responsibilities. Internal audit performs or the COE supervises an assurance engagement in a functional area in which the CAE has significant influence. Internal audit performs or the CAE supervises assurance services related to an activity managed by senior executive, which is non-CEO, to which CAE reports administrative. Also, the examples are if the chief executive officer may have non-audit role, that may impair or appear to be impaired internal audit independence. Example, development of risk management activities is needed immediately with a new regulation. The CE is most qualified to adapt existing risk management activities to a new business segment or geographic market. The organization's resources are too limited and is too small to afford a separate compliance function. Sometimes in some organizations, there is no separate IC team, which is called internal control team because of the budget constraints, which might sometimes impair the independence as well. While discussing the non-audit roles, responsibilities with the board and senior management, the CAE should identify the appropriate safeguard depending on whether the rules are permanent or temporary or intended to be transferred to their management. So these are some examples. If when the board agrees that the management, when the impairment has occurred, the chief audit executive should potential safeguards to manage the risk. If there is a risk, if it's not able to manage it, there is no use. So the requirement is to have assurance activities overseen by a third party for subsequent 12 months after the CAE completes temporary non-audit responsibility. However, CAE should discuss the board with senior management whether 12 months is appropriate. This can be changed as well. This is the appropriate things. So we will move ahead for our today's last topic, which is rules in risk management. It will hardly take in half an hour. So I'll give you 10 minutes break. Post that we will continue and close this chapter. We'll start from 11:25. Intelligence is going to change audit the job and what to do next. Just take with him. So I'll give you a little example of it. So with the help of artificial intelligence, routine tasks will get automated. For example, AI can scan your thousands of transactions in seconds. They can flag the anomalies and they can reduce your manual samplings. Tasks like data entry, reconciliations, document reviews are increasingly handled by intelligence systems. It can help you in this. Risk detection can be also enhanced because we have the use cases in the AI algorithms. So that can help you to enhance the risk detection, early risk detection. It will improve your audit quality because it will provide you deeper insights on analyzing your structured and unstructured data. And obviously, there will be shift in as our roles as auditors because the role shifts from data generator or gatherer to data interpreter and strategic advisor. And the next part of your question is what to do next. We have to upskills in data and tech. As we all know, AI is the future. So we have to learn about data analytics, AI fundamentals, tools like Python is very new thing going rapidly increasing and growing rapidly in across industries. Power BI, you can work on. You can explore some courses from Coursera to develop basic skills. You can also develop some collaborations with your tech teams. So this is all we can do as an auditor. I hope this helps. So now let's start with our final topic for this for today's session, which is role in risk management. So finally, we examine the internal auditor's role in the risk management. Effective risk management is crucial for achieving organizational goals, and internal auditors are intimately involved in assessing it. I gave an examples of risk management earlier during orientation and earlier today as well. So while managing the risk is accounting management's responsibilities, as in internal auditors, we have to provide assurance on how well the risk management processes are designed and operating. So as per your IIA's definition of internal auditing, highlight that auditor bring a disciplined approach to evaluate and improve effectiveness of risk management. Now, in practical terms, let's take an example. The internal audit reviews whether organizations risk identification and mitigation processes are comprehensive and effective. Example, an auditor in a bank might evaluate institutional ARM, which is Enterprise Risk Management Framework. Are all material risks being identified? What can be the material risk? Anybody? Credit risk, market risk, operational risk. I hope everybody has heard about these terminologies earlier. So are appropriate responses in place? The auditor would test the framework and report on any of these gaps. So importantly, what we have to do as an internal auditor is internal auditor can also advise on risk management. So an IAA position paper notes that internal auditors often have a deep expertise in governance and risk. It states that internal auditing is well qualified to act as a champion or even a project manager for enterprise risk management, especially in early stages when organization is building its risk program. For an instance, take an example of a manufacturing company. A manufacturing company introducing an enterprise-wide risk management system might use its internal audit team to run risk workshops or develop a risk register. Under the senior management endorsements, the audit team can train others in risk assessments and help set common terminology, effectively facilitating the process. So, however, there is an exam-worthy caveat. Internal audit must not assume management risk-taking and responsibilities. The same IAA guidance emphasizes that internal auditing can provide consulting services so long as it has no role in actually managing risk. In other words, auditor can review and advise, but not implement or own the risk controls. We discuss about it that we can review as an auditor and advise on the uh, risk assessment process, but we are not the right people who own the risk controls and implement those in the organization. So, for an instance, if chief audit executive has taken on some risk management duties, for example, implementing a common new compliance program, safeguard must ensure independent assurance over that area. So a likely exam question might describe a scenario where an internal audit department is asked to implement security controls for IT department. So the correct answer would note that while auditors can advise on controls, designing and implementing them is a management duty. Otherwise, your independence would be impaired. Are you able to relate risk management and independence? Yes, no. Let me walk you through with the book. According to Principle 9, plan strategically. The CAE plans strategically to position the internal audit functions to fulfill its mandate and achieve long-term success. Planning strategically requires an understanding of two things: our internal audit mandate, which we discussed, organization governance, risk management, control processes as well. Now, understanding governance, risk management, and control processes states that an effective internal audit strategy and plan requires the CAE to understand what, among other things, risk management. The IAE defines risk management as a process to identify. What to identify? Identify threats, identify gaps, assess, manage, and control potential events or situations to provide reasonable assurance regarding the achievement of organization's objective. These gaps, threats to impairment or threats to your independence, what it will result. Due to these things, organization is not able to achieve its objective because there is still a risk which needs to be mitigated. We have to define the responses to the risk. We will learn in the short security chapter the responses to the risk. There are type of responses we can have when we identify some risk. So this is just an overview as of now. So risk is defined both as positive and negative effect of uncertainty on objectives. To understand the risk management, the chief audit executive must consider how organization identifies and assess significant risk. The understanding includes how organization identifies and manages the following: reliability and integrity of financial and operational information, effectiveness and efficiency of operations and programs, safeguarding of assets, compliance with laws and regulations. We have to learn this because in examination, you will get a one question around this, these points. Safeguarding of assets is really important because if anybody in the organization have unauthorized access to your assets, what will result? For example, if your systems are not protected, anybody can access it. We can, there can be a scenario that you will result in data loss. So there is a risk. That's why safeguarding of assets control should be there. So implementations of it. The CA's understanding is developed by gathering information broadly and viewing it comprehensively. Sources include discussion with board and management, review their minutes and presentations, communications and work papers from the internal audit engagements, and assessments and reports by providers of assurance, which is and the internal audit, external audit, and advisory services. The chief audit executive should understand widely accepted risk management principles, frameworks, and models, and professional guidance specific to the organization. The CAE then should gather the information to access the maturity of the risk management process and identify whether the risk appetite means the type and the amount of acceptable risk in pursuit of the strategy and objectives has been identified, defined. Our risk management strategy has been implemented. These are the all verbal things. Let's begin with the 3 lines model. In the orientation as well, we went through it. So internal auditor, instead of internal auditor, IIAs has 3-line model framework which is designed to help organizations to manage risk and ensure effective governance. In the nutshell, it helps organization better manage risk, achieve objectives, and ensure good governance. So how it works? We have 3 lines of defenses. Everybody knows about it. We discussed in orientation as well. First line, second line, and third line. First, which we call as first LOD and second LOD. So first LOD means this involves management and staff directly responsible for managing risk and achieving the organization's objective. They do the day-to-day operations. Means the senior management, they all are lies into the first line of defense. They are implementing policies, they are implementing controls in the organization. Second line, this role includes functions that provide oversight and support, such as risk management and compliance teams. So second LOD responsibility is they have to assess wherever the risk is there. They have to do the risk assessment process. They have to deal with compliance teams, and they ensure that first line is managing the risk appropriately. And finally, it's a third line which we come under external auditors and internal auditors. So from internal audit standpoint, this represents internal audit, which provide independent assurance that the organization's risk management processes are effective. Internal audit verifies that both the first and second lines are executing their task as intended. So rationale for implementation, 3-line model is important because it promotes clear roles and responsibilities that who do what. First line, that is responsibilities lies in first line of management is first line of defense is managing risk to achieve the organization's objective and day-to-day operations. Second line, risk assessments, and third line, independent assurance. So it helps to prevent confusion about the responsibilities. It helps to ensure that all aspects of risk management are covered, leading to better decision making, enhancing accountability by clearly defining oversight duty. Means who do what. There's a complete set of segregation of duties. But the model also emphasizes creating and protecting value through alignment, communication, coordination, and collaboration. which enhances the reliability and transparency of information necessary for risk-based operation decision making. So, where are the motivations of it? We are not discussing it because it's a very theoretical thing. Hardly practical behavior, coordination, improved governance. Let's discuss about your principles. There are the IAI three-line model is based on 6 principles. First principle known as governance. So appropriate structures and processes should enable what? Accountability by a governing body. Generally by a board. We know understand that who lies with the governing body is a board of directors, audit committee, and who they are accountable to their stakeholders. Hence, accountability by a governing body, generally the board, to stakeholders for organizational oversight means board is accountable to whom? Accountable to the members of the company or the stakeholders of the company, be it government, be it regulatory bodies, be it vendors, or be it members. Managerial actions, including risk management to achieve organizations' objective through risk-based decisions. Now, the assurance and advice by the competent, objective, independent lawyer functions that provide confidence and clarity and facilities continuous improvement. This is something the governance principle talks about. Governing body rules. So they include structure and processes exist for effective governance. They should ensure that there should be a proper structure, there should be a proper processes applied, rules and responsibility defined in the middle and lower management. They ensure that objectives and activities align with stakeholders' interests. For example, if your stakeholder, your members have the interest to gain higher profits, higher returns, and also you have some objectives in place. So you have to align your objective and activities with your stakeholders' interests. Ultimately, they are the owners of the company. Giving management the responsibilities and resources to achieve the objective. Obviously, if you have some objectives and mission in place, but if you are not giving, delegating the responsibilities and you are not giving the required resources to the management, it will be able to complete those responsibilities and achieve your objectives? Obviously not. So as a governing body rules, it's our responsibilities that resources that giving management the responsibility and resources to achieve objectives and compliance with laws, regulations, and ethics. Also, establishing and overseeing the internal audit function is a major responsibility of the governing body. Come up with principle P, first line and second line. First line rules most directly relate to delivery of products or services to clients. They include support functions such as human resources, which is called as HR, and they are directly responsible for risk management. Second line rules, some of the which may be assigned to specialists or second line of defense experts, who are very prone to understanding the risk management process. So what they do, second line rules, assist with risk management, brackets is mentioned the first line rule, by providing expertise, support, monitoring, and challenges. So specific objectives may relate to compliance, sustainability, ethics, internal control, IT, quality, and ERMs. These all are the processes. So as an internal auditor, as a third line of defense, we have to regularly communicate to second line on the processes which they have identified risk and they want us to test those controls, those areas, and also regularly with the first line as well. Third line of defense, the internal audit provides the same thing, the assurance and advice on the adequacy of the effectiveness of governance, risk management, and compliance. Reports to the management and governing body on the objective achievement and continuous improvement. It may consider assurance from other internal and external providers when performing these responsibilities, because internal auditor has to perform certain functions as external auditors wants to do from us as well on certain areas. Now we have to ensure the principle 5, third line of independence. So internal audit independence is achieved through accountability to the governing body, which is board and audit committee, unfettered access to the people, resources, and data, freedom from bias and interference, which means independence, and principle 6, creating protecting value. alignment of the activities to the rules, communication, cooperation, collaboration, collectively creates, protects value. It ensures the reliability, coherence, transparency of risk-based decisions. So these are the clear line model. First line roles provision of product services to the client and management risk. Second line says expertise, support, monitoring challenges and risk related matters. And third line, we have, give me a phone. Whether we made a question is whether internal audit can have UAT is accepting things to validate controls. So let's understand, like for the benefit of everyone, let's understand about user acceptance testing. It's covered under your audit functions. It's not covered here, but I will let me explain. So UAT is typically a business function responsibility conducted by end users to verify whether system meets that clear requirements before going live. So if you are implementing a system in the organization before it is go live in the organization, UAT testing was performed. So for internal auditor, there might be an advisory role. So internal auditor can observe UAT. Internal auditor can review their test plans and assess whether control objectives are being met. We can validate controls. We can evaluate whether controls embedded in the system are functioning as intended or not, especially if the system affects financial reporting or compliances. And we also do some control self-assessment. Auditor of this, for example, auditor often facilitates CSA exercises, which may overlap with UAT when validating control effectiveness. But what we can avoid is also very important. So if as an auditor, we actively perform UAT as a user, it could compromise our independence and objectivity. So we make sure that our independence and objectivity should not be compromised. If it is not, then we are good. And also, as an auditor, we are not responsible for designing the controls they later audit. But if you're asking from a best practice standpoint, I can give you an example brief that in order to maintain the independence, being an internal auditor, we should document our role clearly and also aligns with our audit charter and professional standards issued by IAI and PACOB. So our involvement should be limited to assurance and advisory, not operational execution. So before closing this lecture, I would like to give you some conclusion as well. So in this particular lecture, what we have covered so far, we have covered the purpose of internal auditing, importance of internal audit charter, concepts of independence, and how it can be impaired, and the internal auditor's role on risk management. We have also highlighted key concepts likely to appear on CIA exams, such as definition of internal auditing and independence, required contents of the audit charter, and examples of independence impairment. We also go in diverse industry examples to bring these ideas to life. So throughout, remember the guiding theme. The internal audit's mission is to enhance and protect organizations' value by providing independent, objective assurance and advice. A well-drafted charter empowers the audit team to fulfill that mission. Vigilance about independence, ensure credibility, and engagement with risk management ensures relevance. Together, these foundations set the stage for more advanced topics in CIA program, building a strong base for your exam preparation. So from today's perspective, I'm done with this chapter. We'll start with the next chapter tomorrow. If you have any questions, feel free to ask. We have 5-7 minutes. If you have any questions, you can ask. Then we can close the session.
Tomorrow, sir, we'll do some exercise or with question answer or next chapter we'll be doing.
Basically, the concepts are there, and for question answer, you have already have a book. You can go through and you start practicing covering your syllabus. Like as we are covering our syllabus chapter and the content, so you can start revising it as well and start working on the your questions. I believe you get ebook as well for multiple choice questions. Or if not, I'll be in touch with the administrative team to get back with this question booklet if they have. And they will put questions. So Shivam, after this chapter, you have a book, glimpse AI review book. Do you have it? So after the just after this chapter, you have some questions for the practice. Let me see if I can show you. I have the ebook. I'm not able to see. Questions. Shivam, I'll let you know by tomorrow. Because the ebooks we don't. I cannot see the questions here. Do you guys receive physical book as well?
No, actually, that's not a book.
Not yet, sir.
No physical book, only the ebooks.
No. Not even that.
Not even that. Okay, I'll pass it. Can you raise a ticket for it to the VG learning team so they can
Sure,
provide you the
Yes.
Yes, sure.
because in those books you will have those questions for your practice and for your revision of the entire chapter.
Okay.
Anything else?
Okay, sir.
Okay. Thanks everyone. We'll start with our next chapter tomorrow.